Good morning and welcome to Dark Gamma's pre-market analysis for April 22nd, 2026. We are opening with a bullish gap this morning, the ESP 500 currently sitting at 7,107.4. That is 43 points above yesterday's close of 7,064.01. The tone coming into the session is constructive, but as always, the levels are going to tell the real story today.
That's right, Samantha. A gap of roughly 0.61% is meaningful but not extreme, and what I find most interesting is where we're gapping into. Max pain is sitting down at 7,000 flat, which means price is already trading more than 100 points above that gravitational anchor. That kind of distance from max pain tends to create friction as the session matures, so we want to watch whether buyers have the conviction to hold these gains.
Exactly, and layering in the expected move, Dark Gamma's model is pricing a range of 7,011.3 on the low end to 7,116.7 on the high end. Notice that we are already trading right at the very top of that expected range pre-market. That makes 7,116.7 a critical ceiling to watch at the open. A clean break and hold above it would be a genuine show of strength.
On the sector side, technology is leading the charge, up approximately 0.55%, and that is being powered by the Magnificent Seven across the board. Microsoft is the top performer of the group, up 0.58%, followed closely by Meta at 0.56%. Amazon, Tesla, Nvidia, Alphabet, and Apple are all green as well, though Apple is the laggard of the group with just 0.11%. When the megacaps move together like this, it tends to amplify the implied volatility compression and feeds positive gamma exposure for market makers.
Meanwhile, real estate is the weakest sector, down about 0.25%, which tells us the rate-sensitive trade is not participating in this morning's optimism. That divergence is worth monitoring. If technology holds the bid and real estate continues to lag, the market's message is fairly clear. This is a risk-on, growth-oriented move rather than a broad-based rally.
So pulling it all together for the Dark Gamma community, the SP 500 is gapping bullish. Max pain at 7,000 remains a major reference point if we see any reversal, and the expected range cap near 7,117 is the line in the sand for the bulls. A fade back towards 7,050 to 7,000 is the scenario bears need to build a case for. Open interest positioning and 0 days to expiration flow will be critical to watch as we approach the cash open.
Well said, Billy. This is a session where the first 30 minutes are going to be decisive. Watch the reaction at that upper expected move boundary. Keep an eye on technology for leadership confirmation and respect the magnetic pull of max pain at 7,000 if momentum stalls. Stay locked in, Dark Gamma community. We will be monitoring every tick for you. On the economic calendar, there are no high-impact data releases scheduled for the United States today.
A quiet macro day. Focus on institutional flow and key technical levels on S&P 500.
Across the board, the Magnificent Seven are all trading in the green pre-market, pointing to a constructive open for megacap tech, with gains ranging from roughly 0.1% up to just under 0.6%. The tone is cautiously optimistic, but not exactly euphoric. These are measured moves rather than a breakout surge.
Microsoft and Meta are leading the pack, both up roughly 0.5% or better, while Apple is the clear laggard, barely nudging 0.1% higher. Nvidia, despite all the attention it usually commands, is sitting near the bottom of the group with a gain of just over 0.25%.
Worth flagging that the Trump-NATO headline could be adding a subtle layer of caution here. Geopolitical noise tends to keep institutional buyers from pressing too hard on risk assets, which might explain why these gains are solid but not explosive. The fact that even the laggards are green suggests the underlying bid for tech remains intact.
Tesla and Amazon are holding the middle ground, both up roughly 0.33%, which fits the broader pattern of a sector that wants to move higher but is waiting on a cleaner macro catalyst. Overall, megacap tech looks steady heading into the open, with Microsoft and Meta setting the pace for the session.
4 heavy hitters crossing the tape today, and the one commanding the most attention this morning is GE Vernova, sitting at $267 billion in market cap with a beta of 1.74 and an expected move of 5.2% in the utility space.
That beta tells the whole story, Samantha. A high volatility utilities name is unusual, and options pricing is reflecting genuine uncertainty around its energy infrastructure outlook this quarter. Philip Morris and Etant are also reporting pre-market, but both carry near zero or negative betas, making them far quieter setups by comparison.
After the close tonight, the spotlight shifts hard to Tesla, $1.45 trillion in cap, beta over 2, and a 5.1% expected move that will absolutely ripple through consumer cyclical positioning and likely drag SP 500 gamma exposure heading into the session open tomorrow.
Lam Research and IBM round out the after-hours slate with expected moves of 6.5 and 6.2% respectively, both meaningful for the semiconductor and enterprise tech complex. But Tesla's sheer size means its print will dominate 0 days to expiration flow and overnight futures pricing across the board.
Traders may rotate defensively early, and we could see the SP 500 gap slightly lower as risk appetite gets tested by that headline.
That macro tailwind from Germany may actually give dip buyers some confidence if we see any early weakness in the SP 500.
Watch the gamma exposure picture carefully around key strikes, because a positive earnings surprise like this can shift open interest dynamics and create a squeeze if dealers are short gamma.
My read is a cautious but not bearish open, with the NATO headline as the key wildcard that traders will be watching for any escalation before the bell.
3 companies are stepping into the public markets today. So let me walk you through what that actually means before we dig in.
Right, an IPO or initial public offering is when a private company sells shares to the public for the first time, raising capital while giving everyday investors a chance to own a piece of the business.
Leading the pack is National Healthcare Properties, trading as NHP on the NASDAQ Global Select Market, offering 38,500,000 shares priced between $13 and $16, followed by Yesway Inc. under the ticker YSWY, also on NASDAQ with nearly 14 million shares in the $13 to $23 range.
Rounding out today's slate is Encore Medical Inc. debuting as EMI on the NYSE MKT with 3 million shares at a fixed price of $5, making it the smaller and more speculative play of the 3 listings today.
Scanning the nearest strikes to spot at 7,107, the 7,220 call stands out with 4,802 contracts and a staggering 473% surge in open interest overnight, signaling aggressive fresh positioning just above current price. On the put side, 6,880 is the most striking, exploding 4,257% day over day to 7,102 contracts, which is the single largest percentage jump across all nearby strikes.
That call buildup at 7,220 puts a credible resistance ceiling roughly 113 points above spot, while the gamma exposure clustering there could act as a gravitational cap if dealers hedge into strength. The 6,880 put surge is more than 200 points below spot, so it reads less as immediate support and more as tail risk hedging or a directional downside bet ahead of the April 24th expiry where the put-to-call ratio hits 2.44.
The 7,350 call also deserves attention, up over 1,068% to 8,088 contracts, making it the second largest call cluster and extending the resistance zone from 7,220 up through 7,350. With Max Pain sitting at 7,000, the market is trading a full 107 points rich to that level, meaning pinning pressure is already being stretched.
Putting it together, the actionable range for today leans towards 7,220 as the first meaningful resistance and 6,850 through 6,880 as a layered put support band. Though the sheer overnight open interest additions on both sides suggest positioning is still in flux and a move toward max pain at 7,000 remains the structural gravitational pull by expiry.
Breaking down the key levels for this morning's open on the SP 500 0 days to expiration flow, the gamma flip sits at 6,920.9, which is the price where dealer hedging behavior flips from stabilizing the market to amplifying moves.
Right, and with spot currently at 7,107.4, We are trading well above that gamma flip level, meaning dealers are in positive gamma territory and will be buying dips and selling rips to stay hedged. That mechanical behavior tends to compress intraday volatility and keep price action relatively contained.
The call wall at 7,200 is your ceiling of maximum call open interest, where the sheer weight of gamma exposure creates strong resistance as dealers sell into rallies to hedge. The put wall at 7,065 is the floor with dense put open interest just below spot, giving the market a cushion of support heading into the open.
So the setup traps price in a corridor between 7,065 and 7,200, with the path of least resistance staying range-bound unless a catalyst drives a clean break of either wall and shifts dealer hedging pressure decisively.
Big money leaves traces. The highest liquidity concentration over 1 year sits at the 6,982 level, below current price, with maximum liquidity concentration over 11 sessions.
These levels represent zones where the highest institutional liquidity has accumulated over the past year, making them key support and resistance areas for S&P 500.
Over the past week, the level with the highest active liquidity is the 7,045 level, below current price, with maximum liquidity concentration over 2 sessions. Recent activity confirms strong institutional interest in this area.
When price approaches these levels, watch the market's reaction closely. These are zones where major players have left a significant liquidity footprint.
Here is the complete level map for today's session. S&P 500 is at 7,107, above the gamma flip at 6,921.
1 sigma range, 68% probability, goes from 7,011 to 7,117. 2 sigma, 95%, extends from 6,959 to 7,169.
On the GXX side, call wall sits at 7,200, structural resistance. Put wall at 7,065 is where dealers become forced buyers.
The top institutional whale levels nearby are 6,970 and 6,963. These are the highest liquidity concentrations in the market. Expect reactions there.
Breaking now from the dark gamma institutional scanner, 9 new large entries flagged today, with fresh premium flow totaling over $25 million across 4 tickers. Leading the new detections, Marvol Technology with a put position at a strike of $135, expiring June 26, 2026, drawing $7.31 million in premium across 6,423 new contracts, executed at 95.5% of ask, a near aggressive fill. Right behind it, QXO with a put at $25, expiring January 27, 2027, pulling $6.95 million across 7,553 new contracts.
On the coal side of today's fresh detections, Royal Caribbean is drawing significant attention. A call at a strike of $300, expiring May 15, 2026, with $6.08 million in premium and 6,057 new contracts filled at 98.9% of ask, essentially a full ask execution. And Estee Lauder rounds out the new entries with a call at $105. March 19, 2027 expiry, $5.3 million in premium across 7,981 contracts, notably filled at 100% of ask. A textbook aggressive institutional print. That puts consumer discretionary and consumer staples firmly on the radar alongside tech.
Now turning to confirmed flow. Previously detected contracts seeing open interest growth of 20% or more. Core Scientific leads that list with a call at $21. September 26, 2026, now carrying 25,075 open contracts and $7.88 million in cumulative premium, filled at 99.8% of ask. That is one of the cleanest confirmation signals in today's data. Apple's call at $300, June 26, 2026, now stands at 14,037 contracts. And AXTI, the semiconductor substrate name, is drawing attention with a call at $70 and a staggering $25.59 million in total premium across 10,869 open contracts.
Stepping back to look at the full picture, across both new detections and confirmed flow, the scanner is showing a clear tilt toward call positioning. 6 of the 9 flagged contracts are calls, concentrated in technology, semiconductors, crypto infrastructure, consumer discretionary, and consumer staples. The 2 put entries, Marvel and QXO, carry the highest ask execution rates in their category, suggesting those are not passive hedges. Nvidia's put at $180, May 15, 2026, is the one confirmed put seeing open interest growth, now at 5,186 contracts. Overall, today's tape reflects broad-based institutional engagement across multiple sectors, with premium concentration heaviest in semiconductors and tech.
Breaking news from the Dark Gamma scanner. A top institutional contract has been detected and confirmed with open interest growth of 43%. The ticker is AXTI, a call option at the $70 strike expiring June 18, 2026. Total premium registered in this flow comes in at $25.6 million, with current open interest sitting at 15,523 contracts.
Thank you, Samantha. Looking deeper at the flow data, volume at the time of detection was registered at 11,517 contracts. The institutional entry price, meaning the average premium paid per contract at the time of detection, was recorded at $22.22. That entry price point is a key reference level that our scanner locks in when the flow is first flagged.
Now here is an important piece of context for our viewers. The current contract price is $24.80, compared to that institutional entry of $22.22. That is a difference of $2.58. In terms of setup structure, the scanner looks for situations where the current contract price is near or below the original institutional entry price and where open interest is flat or growing. In this case, we have 10,869 new contracts added to open interest, which confirms the position is expanding rather than closing.
And finally, on the underlying price level, the break-even for this contract at expiration is calculated at $92.20 on the AXTI stock. That means the underlying would need to reach that level by June 18, 2026 for this position to break even at expiration based on the premium paid at entry. We will continue monitoring this flow as conditions develop. This is Dark Gamma Financial News.
If you want this level of market intelligence every single day, join Dark Gamma right now. Bots working for you, whale levels, real-time institutional positioning, opportunity scanners, and gamma exposure updated by the minute. You also get access to institutional liquidity and options levels for any ticker ready to drop directly into your TradingView indicator. Exactly where institutions are positioning. No noise, just data. Dark Gamma is the edge that separates winning traders from the rest. The information that moves the market in your hands today. The link is in the description. Click it now. We'll see you on the inside.